Hey everybody, today is August 24th, 2024, and today we're going to talk about the price of Bitcoin and where I see the price of Bitcoin headed towards for the month of September. Please read the disclaimer before you continue watching the video. You can pause the video as you read it. Okay, so where we left off last time, Bitcoin basically was making a run for the resistance area over here. And just a refresher, my thesis was that, let me get a cleaner chart. My thesis was that if you've been watching my videos since earlier this year, I said that there's going to be a chance we could consolidate after this massive move higher, right? And the reason why I said was that similarly to our last consolidation period over here, last summer, right? This was a 6 months consolidation, which the reason why that happened is that we were hit this resistance level at 30,000, right? And 30,000 was strong resistance from our last bull market cycle in 2021 because it held as support and finally broke in 2022, right? So when we finally came back above, of course it was going to be strong resistance, right? We hit it 1, 2, and a third time the charm broke through, right? And right now, I think something similar is happening is that we're hitting our next major resistance, which is around 70,000, right? Which was the past bull market top. And it was a double top. And double tops are notorious for being really strong bearish signals, right? And they're very, very strong resistance levels to break through. So similarly, we're seeing something similar to what we saw last year, where 6 months sideways, and we're about to finish 6 months of sideways here, right? But so far, Bitcoin is doing pretty good defending this level and finding a range between 50,000 to 70,000, right? And this is a little clearer on the Fibonacci. Yeah, we have the Fibonacci channels here. You can see how we face resistance on this Fibonacci area, right around 70,000, right? And of course, we come down and we tend to find support. And now we're pushing up higher and trying to reclaim the, we're trying to hold the support level and retest this resistance level around 70,000, right? And you can see we got rejection candles over here. So that was a early signal that maybe we weren't going to hold this level, right? Where we left off last time, we held the 200-day and then pushed up higher, and we basically got rejected off here. And holding the 200-day is very important because that tends to be a strong indicator that we're still in a bull market. So when we broke it, it was a little worrying, but we were able to reclaim the 200 days for now at least, and hopefully we can push up higher towards the end of the month and we try to reclaim 70,000 and push up higher, right? And the reason why I think this is possible is that we recently had positive news regarding the CPI finally coming down, starting a trend down to below 3%, right? It's the first time we've had it since 2021. So it's been 3 years, over 3 years now, since we've had inflation, since we had last had inflation under our CPI under 3%, right? And earlier this year, people were talking about how we're going to have like 5 or 6 rate cuts, and what happened was that the CPI showed that inflation was rising. So that really put a damper on those expectations. But since March, we've seen a nice trend of multiple plots showing that the price is moving down steadily. Even if it's very slow, that is moving down. Sorry, not the price, the CPI, the inflation. So now we're below 3%, which is closer to the Fed's target rate of 2%. And of course, the next available plot is going to be data point is going to be on September 11th, right? So this is good because now the market, oh, and also on Friday, yesterday, for Jerome Powell, the Fed chair, gave a speech where he hinted that they were ready to take action. And so now that the probability of us getting a rate cut in September, which I've been talking about over the last 2 or 3 videos, that we're probably gonna get our first rate cut in September, finally is probably going to come to fruition, and that's going to be, I think, a strong catalyst because, of course, lower rates makes it cheaper to borrow money, and it'll stimulate the economy, and people are going to go out and start spending again, right? Businesses and people, right? It's gonna make it easier, cheaper to get mortgages, and so money is gonna start flooding into the economy again, and that is going to be great for risk-on assets like stocks and, of course, cryptocurrencies like Bitcoin, right? So that's going to be a positive catalyst going to September. So my prediction for September is that we're going to finally come up, retest this resistance area around 70,000, and I think this time we're going to break through, and that's going to finish my prediction that I've had earlier this year that we're going to consolidate for 6 months after this impulse move higher, just like we consolidated for 6 months after impulse move from the bottom of 15,000, right, last summer. So some potential headwinds is, of course, usually when the Fed, now the Fed funds rate is currently at 5.33. They're predicted to cut rates around 25 basis points. Some people saying 50, but I think they're going to be conservative and start with 25. So they have more leeway to cut more, right? Cut in the future. They don't want things to get a little too aggressive, such that we might see a spike in inflation. So I think they're probably going to go for 25 basis point. But if you look at historical data, when the Fed starts cutting after raising interest rates for a while, it tends to be followed by a recession, which is this gray shaded area. Another thing is the inverted yield curve currently is at negative 0.09, and it's getting close to being uninverted, right? And when it uninverts, it tends to be followed by a recession as well. You can see the shaded area, right? Every time it dips below and uninverts, we tend to have a recession. Now here's the thing, I do think that if we do get a recession, it'll probably be a shallow recession, like we saw in 2020, right? Because we've basically been in a 2-year silent recession, right? Since 2022, when the Fed rose interest rates and things were just really expensive, right? And it was very expensive to borrow, right? Since the interest rates are high. So people were sort of like in a dilemma where it's just like, things are expensive, but it's also expensive to spend. So people have had to cut back on their budget. And so we sort of been in like this silent recession in the working and middle class for the last 2 years. So I think that if we do have an official recession that's recognized by the government, it's probably not going to be as bad because it's been sort of we've been living through that, right? At least the middle class and working class have. And so I think that it's not going to be as bad as people are expecting. You're hearing a lot of hype. Oh man, when the Fed started cutting and stuff like that historically, and I'm not arguing against that, but I do think that it's not going to be as bad as people think. And I think that the rate cuts ultimately will be more of a tailwind than a headwind, and that's going to be really great for risk-on assets, right? So I do predict for the month of September, again, one more time, we're going to push up to the resistance level of 70,000 and then eventually hold this level and go up higher into price discovery, right? New all-time highs. Now let's look at different charts that we always look at to give us an idea of where we are in this cycle. So if we believe in the 4-year cycle, we are basically still we're in the year right before, we're the year of the halving, which is usually the year right before we have a parabolic move, right? And if we just compare ourselves to previous cycles, we are sort of in that area, right? We're just sort of in between this green and orange line, which this green line, when the price goes below, it tends to be a good time to buy. It means it's oversold, undervalued, right? When it goes above this reddish orange lines or touches it, like in the last cycle, it tends to signal that things are getting overbought, overheated, right? It's probably time to take some profits, right? So we are in the middle, just like we were in the year before the big run up. So it does seem like we are falling on schedule for the 4-year cycle. And next year should be very exciting, right? Pi cycle top indicator gives an idea of when we should start to take profits, right? Whenever we cross the dot, when the orange line crosses above the green line, it tends to give you, it flashes the indicator to sell. That could be the top of the cycle or near the top of the cycle, right? And for now, we are looking like we're still in the middle of the cycle, right? We did touch the green line, and these bands did get close because we did run up to new all-time highs early this year, which we have never done before. We have never hit new all-time highs the year before our parabolic move, right? The same year of the, around the half. I think we actually hit all-time highs before the halving, right? Let me just double check. Yeah, we hit all-time highs before the halving, which has never happened before. So that got me a little worried that we might peak a little sooner this cycle. But the fact that we've been going sideways for 6 months basically helped reset the bands. So you can see the band starting to turn down, and it's starting to widen again, which means that there's more of a buffer zone to push up higher, right? So next time we make our next impulse move higher, because the bands are wider this time, it should give us more leeway. It should give us more room to run higher before the bands cross and signal a sell point, right? Probably above 100,000, right? I mean, the upper part of this band, the green line, is already pretty much at 100,000, right? Like 97,000. So within the next 12 months, we'll probably see it around definitely above 100,000, right? So this is another positive sign that we're probably in the middle of the bull market, and we haven't hit that parabolic run yet, and we're definitely nowhere near oversold, and definitely not near flashing a sell signal yet, right? Golden ratio multiplier. Again, if you look at the past, we're in the zone right before the run up in like 4 years ago, right? Late 2020, right? Late 2016, right? We're still in that above the orange line. We're nowhere near like the red line or crossing above the red line, right? With the red line being above 100,000, right? So again, another chart that shows that we are still probably in the middle of the cycle with a lot of potential room to run higher. Bitcoin Cycle Master, again, showing that we are still in the middle of the cycle. We're nowhere near the red line, right? Usually that signals the top. So another bullish chart. And finally, we got the Forecast tool, which combines all these different indicators, which historically has showed pretty accurate calling the bottom and the top. And we are pretty much in the middle of that right now, right? So, and very similar to late 2016, late 2020, and again 4 years later, late 2024. And of course, we are nowhere near flashing a sell signal, touching any of these indicators at the top, right, which are all over 100,000. So all of these charts are showing that Bitcoin is looking good, right? And especially with the upcoming potential, highly probable rate cuts in September, there's just a lot of tailwinds showing that Bitcoin is not only in a strong bull market, but the parabolic run that we're all looking for is probably not even close to beginning, even though we've hit all-time highs earlier this year, right? This 6 months consolidation, in hindsight, I think it's going to, people are going to look at this as building a strong base. Let me get a clean chart. Building a strong base before we push up higher, right? And that's ultimately going to give us, I think, a much better and sustainable rally higher. And I've said this many times, you can follow me on X, that I do think that this time is going to be sort of like a more slow methodical parallel move higher than what we saw last time, which is sort of like this impulse move followed by this sort of like awkward tapering off double top and then a drop, right? So the fact that we're going sideways, like an impulse move sideways, and parabolic move higher, right? Just like in 2016, we saw impulse move high sideways, followed by a parabolic move in 2017, right? So yeah, I think this cycle is going to look more like the 2016-2017 bull market than the 2020-2021 bull market, right? But of course, there's a lot that we need to wait for. Of course, the CPI data on September 11th, we want to see the trend continue down closer to 2%, right? Because that's going to open the doors more for more rate cuts, right? We're still pretty high historically over the last 20 years at 5%, over 5%. So if we can get this close, if the Fed will keep cutting, that would be great for risk-on assets like stocks and of course Bitcoin. So again, to reiterate, to summarize, my belief is that in September it's going to be a good month. Fed is probably going to cut rates at least 25 basis points, and that is going to give Bitcoin and other crypto and risk-on assets more fuel to push up higher. I think we're going to retest this resistance area in September around 70,000 and finally push through it and reach new all-time highs sometime in late September to early October. Of course, we have to see what happens. Anything can happen, any news can come out, and nothing is guaranteed. So I'll definitely come back in late September and see if my prediction was correct and where I see the month of October and the rest of the remaining of the year headed towards as the price action develops going forward. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.